Okay, I think we will make a start. Good afternoon to all of our participants and to our panelists. My name is Richard Banks. I am a partner at Soling Partners, and I am the moderator on this second session in the Fintech Robos conference on pensions and savings in the Middle East. This session is entitled "To Turn MENA into Savings Economies, What Culture and Which Products Do We Need to Build?" I am joined, I'm very pleased to say, by four very distinguished and experienced panelists. I myself, having told everyone to switch off their phones, I forgot to do that. I am in the UK. My panelists are in the UK and also in Bahrain. I'd like to introduce, ask to introduce herself first, is Marwa Al Maskati. Marwa, could you tell us a little bit about who you are and what you do, please?
Hi, morning, Richard. How are you?
Well.
Thank you for having us, and thank you for the insightful discussions which we've heard earlier today. So I'm Director of Marketing and Business Development at Bahrain Bourse, licensed market operator at Bahrain. And as a licensed market operator, one of the core objectives that we have is obviously operating the market and ensuring its integrity and investor protection. But also as a byproduct, it's ensuring and overlooking and instilling financial literacy within as part of our key strategic pillar. So this falls into what we've heard earlier today in the first session, and which we will elaborate further on today in this session.
No doubt. Thank you very much. Next up is Zeeba Askar. Zeeba, same question to you. Who are you? What do you do? Why are you here?
Good morning, and thank you for having me as part of this panel. And I think it's a very timely discussion to host a topic of savings. So I am the head of Banking and Finance Center at the Bahrain Institute of Banking and Finance, BIBF. And BIBF operates under the umbrella of the Central Bank of Bahrain. Our core objective is developing, upskilling, and reskilling, actually, the human capital not only in the financial sector, but we also look at any kind of associated sectors. So we provide comprehensive list of programs. We partner with different stakeholders. And I'm also a board member at the Bahrain Association of Bank, and I'm also a board member at the CFA Society Bahrain.
Wow, how do you find the time?
Yeah, I ask myself the same question sometimes.
Well, very, very good of you to join us today, to give up some of that time from your no doubt horrifically busy schedule. Next up is Fadhel Al Makhlooq. Fadhel, tell us a little bit about yourself and your angle on the pensions and savings topic.
Yes, hello everyone. My name is Fadhel Al Makhlooq. I am the Chief Capital Markets Officer. So in my role at SECO, what I do is basically align the client-facing businesses, such as brokerage, which supports mostly brokerage, market making, treasury. The whole idea is that basically put all these business lines with the aim to improve customer experience, and also be out there to figure out what clients need. So so it's developing new products and improving customer experience. I am also board member at a fully owned subsidiary of SECO, which is SECO Financial Brokerage. That is a fully fledged brokerage company in the UAE. It basically serves the three markets. And I'm also part of our recent acquisition of a majority stake in Saudi, which is soon to be renamed SECO Capital. So that's about me.
Mm-hmm. Just a quick word on SECO, because SECO, showing my age here, but I remember SECO as Securities and Investment Company.
That's
it's now SECO Bank.
Yes.
So what's behind the migration and evolution, that's the word I'm looking for, of SECO, and where do you see that you will be, in a few years' time, and is that relevant to the topic that we're talking about today in terms of the customers that you will service?
Yeah, for sure. So we started as a securities and investment company, back in 2008. We applied for a wholesale bank license. So what we currently we are is basically a wholesale bank that provides capital markets services. We're slightly different from your standard capital market wholesale bank, which is very much involved in treasury business, syndication and so on. We're more focused towards serving the capital markets. And on your second question is, where do we fit in? Now, as I said, part of the alignment of an improvement of customer service, providing solution, is that we have identified saving as a priority. We have also, and through that, we have actually engaged in one of our early initiatives that will answer some questions in terms of long-term savings that can be done through many different avenues, either through private banking, wealth management. We have yet to sort of pin down the final shape of what we are doing, but we have taken initial steps in terms of defining what needs to be done.
Thank you. William, last but by no means least, I'll come to you. Just in case our audience are wondering, I have done these introductions alphabetically rather than in any other order of priority. So William, could you just tell us a little bit about who you are, what you do, and how it bears on the topic that we are discussing today?
Yeah, thank you very much. And thank you again to Ibrahim for setting up the conference and the invitation. So I'm the CEO of D3P Global, and we work with countries around the world to either set up a pension system or reform an existing one. And I got into it. I started out life in the UK Treasury and worked in the UK's pension regulator, also the World Bank and various other places. So have seen pensions and savings, insurance systems across the world. And we now, as I say, sort of work to try and bring that global expertise to the particular country with whom we're working, and sort of sifting through the hundreds of examples to find the ones which may be most appropriate for, the local context, which always should be such a very strong driver.
Thank you. And have you done a lot of work in the Middle East? I mean, is this an area of focus for you, or where globally have you been most focused?
So basically worked in all regions. The Middle East, maybe a little less than others. When I was still at the World Bank, we wrote a report with the Arab Monetary Fund in 2018 on the pension challenges across the Middle East and the GCC. Currently working with UNDP, who are trying to stimulate the debate on environmental, social governance investing amongst, at the first round, with some of the major public pension plans, which are of course quite large across the region, and then sort of other individual things. So it's good to see the debate is an active one, and hopefully more reforms for the future. Excellent,
thank you. So we have about an hour. So we have until about, as I said, about. I think it'll be 1:30 Bahrain. Sorry, I'm running on UK time, so 11:30 UK, which is 1:30 Bahrain, and then we'll have a break, and then I will be back again, unfortunately for you, lovely audience, to interview Andrea Hassler at a little later on in the afternoon. We're going to have four main topics, and you, as the delegates, are more than welcome to ask questions. We may have a time at the end where we go to questions, but I think it would be great if you could all ask questions throughout in the Q&A. Just type them in. I'll see them. I've got them open on a second screen next to me, so I can see them in real time, so that we can endeavor to address the questions that you have as soon as you ask them, or near enough where it is relevant, rather than waiting for 30 or 40 minutes. This is, of course, a recorded session, so those of you who may miss some of it can pick it up again later on demand, I think is what it's called. So, William, I'm going to come to you as our sort of international delegate here, just to ask about what I think is a very basic but a very important question. And already rather two questions sort of related to each other. That is, what are savings? And therefore, and related, what is a savings culture? What is it that we're talking about in terms of what we want to try and develop in the wider Middle East?
Yeah, so I mean, traditionally you think of savings short, medium and long term, and maybe, well, showing I didn't grow up in the region, rainy day savings in case of an accident, which obviously links into insurance. So most of what people are kind of typically talking about, I suppose, are the longer term savings for old age, when you can't fund things through work. And the savings culture, I think, is a kind of quite a slippery concept. So, you know, all countries are different, but one of the most common messages we get through any country, whether it's developed or developing, is people in my country don't save. The young in particular are living for today and not thinking about the future. And no one understands savings and finance, and financial literacy is low. And that's more or less as true in, you know, the UK and the US as it is in other countries. And the reason I think it's one of the key messages I wanted to kind of get across throughout this whole thing is that policy matters and regulation and supervision matters. So you take Malaysia, on the one hand, an amazing savings culture. They have about 24% of salary between the employer and the employee going into Malaysia's Employees Provident Fund. Over $200 billion in assets under management, strong governance and investment now. And you're like, fantastic. It's one of the best accumulation phases in the world in pensions, lots of savings. All of it paid out in a lump sum, 70% of it gone in 10 years. And you've got the sort of living side by side, an amazing savings culture with a very intensive spending culture. And so in the end, I think the culture sort of matters, but, you know, policy, regulation, big decisions matter also.
Is what you're saying that the culture is both in terms of it's a policy driven culture, not driven, but the culture has got to be existing in the policy apparatus as well as within the individuals who are doing the saving?
I think what I'm saying more really is, you know, the old cliche that's culture will eat strategy for breakfast, and, you know, you've got to pay a lot of attention to the culture. I think on the one hand, that's right. But then you look at country after country and it's the same culture. So look at the UK reforms to have automatic enrollment into pensions, which has seen a massive increase in the coverage of pensions. You know, nothing changed in the culture before and after. There was some good marketing. But we're still, you know, people in the UK are still the UK, and they still have all their sort of faults and all their sort of strengths. It was the policy environment, maybe well targeted to the culture, but the policy environment changed, and that dramatically improved the situation for savings. And so I think you need to be very sensitive to the culture. But if you wait for the culture to change to fix savings, you're going to be waiting a very long time.
Great. Well, I'm sure we'll come back to a lot of that. Fadhel, I want to come to you and get, you know, your views as a financial markets person on savings. I mean, what in terms of what they are, it's not just a pension, is it? It's a lot. It's a lot of other things. Is there a way of defining savings that is meaningful? Is it to do with time horizon? Is it to do with what the asset that savings in, whether it's cash or real estate or you know, a pension fund or a stocks directly in the stock market? What's your view on what a saving is?
I think there is confusion, and the line is really not very clear between what people define as saving and what is not. Often, you ask people, what have you saved for the future? And they tell you, oh, I'm long, I bought these bonds, I bought these stocks, and they give me a dividend and so on. But to me, we have to, define the line. And the line is basically the time frame for this investment, / saving. I think savings can be easily defined as anything with a time frame of 10 years plus, because the other side, which is investments, decisions, even if you ask somebody who said, oh, I'm holding this bond till maturity, 15, 20 years maturity. Often when people are sort of driven by, price movements, so if this bond goes like 5-10%, there's always this temptation to, take profits, and a saving turns into a trading position. So I think if we are to develop a culture, a saving culture, we have to define what is proper saving for the future. And I think we have to start using the term structured savings, where you accumulate, you put small amounts, but where I would say sometimes you will have to teach people how to do it. Keep the money out of their reach, because that's the way it will just stay there for the long term.
Yes, I have this conversation with my children on a daily basis. Now, they're pretty good at it, must be said, but even so, that's not savings. If you can get it with one click,
yeah, I mean, it's
saving. Even if the account says savings above it, not savings.
I've had these conversations with a lot of clients who, think they are saving, but they are actually not, because a month later, they're out of that bond or stock because, it shot up 20-25%.
Yes. Is it in your mind about, what the use of these assets or these funds eventually? There's a in markets like the UK and even more so in the US, people have a college fund or a 401k, or they save in order to put a deposit down on a house in which they will live, and they sort of compartmentalize their savings into different products, but it's done less by product and more by purpose. Is that one way of looking at that you think might be useful for the Middle East, or is it really too soon to be able to segment it like that?
No, I think it's important to look at cultures and how people tend to save. And I am not of the view that we don't have a saving culture. We do, but it is taking a different form. It's just, the Middle East, parts of the developing countries tend to have, this home ownership as, is a way of keeping wealth. Take most parts of Europe where home ownership is very low, versus the Middle East, versus India, Pakistan, where owning your home is the number one objective, and then followed by everything else. I don't contest that that notion. I think it's good. The only problem with this is that it tends to concentrate wealth in one asset class. What we need to build is diversity. I think this is the new culture that we need to sort of bring about and educate people about, is that don't put all your eggs in one basket. There is, and then you also have to have sort of an objective for what you're saving for. I think it's more structured in sort of Europe, US, and the developed countries, where people save for a certain so for a certain objective. What's helping them is that, there are the products, there are the menus that they can pick from, be it diversified portfolios, especially specialized portfolios, all those menus are available. So it is easy to structure. I think that's what we need to, the culture and sort of the diversity that we need to, bring about in our markets.
Thank you. Marwa, I'd like to come to you next and ask you a sort of similar version of the same question. Do please tell us about what, your view on what savings and a savings culture are, but perhaps also if you could talk to the role of a market operator like the Bahrain Bourse in that savings culture. It's not, I think perhaps for those that don't understand completely the role of an exchange, it may seem a little unexpected to see a stock exchange so deeply involved and concerned with the creation of savings culture. So, do please answer that.
So, one of the main objectives of the market operator is to promote investor. So,
Fadhel, could you mute your microphone? Thank you. Sorry, Marwa.
So, and in doing so, operators invest heavily in market education programs of financial literacy for the objective of instilling a savings culture within various income groups and age groups. So investors are educated on the importance of investing wisely and developing a nationwide investment and savings culture, which will be able to protect them from security fraud and abuse. And this will help regulators in their enforcement duties while contributing to the development of a more transparent capital market. So it's a holistic ecosystem, investor protection, savings culture, protection from securities fraud, and building a more transparent capital market. They're all intertwined together to achieve that ultimate objective, as I've mentioned earlier.
Mm-hmm. And I mean, I suppose the role of an exchange is partly, at least from, I come from an investment background, so I always think about exchanges as opportunities to raise capital, to provide liquidity, that type of thing. But and increasingly the larger exchanges in the world are dealing mainly with institutional and fund rather than directly. So, but you have outreach directly to savers, to investors, to educate them on the role that an equities market or indeed a fixed income market can play in their savings. Is that how you do it? Yes.
So it's a twofold argument or objective to be achieved. Mm-hmm. The first is instilling that savings culture and financial literacy, and on the other hand, offering the products to both retail and institutional clients to enable them to invest in the securities market. By offering the products and mainly targeting the retail clients, it will actively enable a more or higher volumes of trading, and which will be beneficial to the exchange and to the economy. So it's one objective will help achieve other objectives and byproducts of the exchange's operation and ultimate market integrity and fairness.
Thank you. Well, there's a lot to unpack, and we will come back to, I know, a number of those topics later in this discussion. Zeeba, to you, I'll ask you a slightly naughty question, but I'm sure you'll be able to answer it. I mean, you're very involved in what I would call financial education, which is different from purely financial literacy. Does that involve financial education, upwards, as it were, to the policymakers and within the community of financial professionals to perhaps begin to understand more the way in which, private savings can play a role in Bahrain, in the GCC, and in the wider MENA region?
Yes, thank you for asking this question, and I think it's very relevant to the field we're working on. And to answer this, I just want to speak briefly about the life cycle saving, because I think the more the public are aware of the different stages of saving, the more they will come to realize what does saving mean at various levels of life. So saving, as a basic definition, it is about income you get minus the amount you're spending. And the amount you're spending is either you're spending it on something you need or you're spending it on something you want. So the amount you spend on something you want is actually a choice. And whenever you make that choice, as far as I look at what saving means, if you choose to spend today for something that's discretionary, then that is money that you have taken away from your ability to consume it at a later stage. So that is how I look at saving. And to be able to give I would say, comfort to people who are attempting to save, and at some point in time they either procrastinate or they stop their saving programs, it's very important to know what saving means at different life stages. So for example, if I'm looking at individuals who are below the age of 20, who are still in the university, they would probably be in the negative if I would look at the income versus the spending formula.
I can assure you that's the case in my family.
Yes. So then definitely they will be on the negative. And because they are on the negative, when they hear the term saving, it could be stressful for them. And then later you see at the individuals who are starting their work and they are in a stage that I would say still they will be in the negative because they are still building themselves. They want to purchase their cars, they want to build a family, they want to have houses, and that is where they go actually to take loans and they become in the minus. Then there are the individuals who, let's say, made the smart decisions on their financing strategies during their 20s and building their lives. And hopefully by the time they reach late 30s up to, I would say, 50s or just before retirement, that they should be in the positive. And when they are in the positive, then it's about what are you going to do with that excess money you have. And of course, there are the investment plans that you can do. There's the business investment that you can do for things that generate money for you, which is basically making your money work for you. And obviously spending on whatever amount you want. So when we think of financial literacy, and what does financial literacy means? It means you understand the need of your target client or the target audience that you are addressing about saving, and provide to them the relevant information or literacy they need so that they can go through the different cycles and manage and make smart decisions that will enable them be financially secure and hopefully less stressed when they are at their retirement age. So when I look at the financial sector, I think the relationship managers, the professionals who are involved in addressing customers and receiving, let's say, high net worth individuals or private clients, the more they know about the needs of their clients, their spending habits, the more they will be able to give them better advice or even customize products that will be suitable for them and will address their needs. So that is something I would say financial literacy to be looked at as different kind of literacy at different stages of the life, as well as what kind of products can be offered to address those needs.
Well, it's almost like you've got a script, because we're going to come and talk about products in a minute, but I want to keep you there for the sort of next topic, which is about who, before I come to William that. But, the thing about the GCC particularly, but to some extent about the wider Middle East, as was touched on by my dear friend Yarmo in the previous session, was that historically in the region there are quite generous state pensions, particularly in the GCC, less so elsewhere, but also elsewhere, and that from an income perspective, you didn't really need to save. You may wanted to have assets like a house or a car or whatever, or healthcare insurance if you need specialized healthcare. But in terms of your post-retirement income, you could pretty well be confident that the government would give you a good living amount on which to live. Now, in my country, in the UK, you can't live on the state pension. I mean, some people have to, and it's terrible. But so you need to have that, and you need to have a private pension, and you need to have other savings. Who are the people in the Middle East who need to be saving? And you can look at that question both in the short term, i.e. saving now, today, and people who need to be saving in the long term. I mean, are we looking at the current millennials who, by the time they get to their retirement in 45 years' time, the current sort of pension system in the GCC and the Middle East will be very different. So who are the people that we're talking about? That's to you, Zeeba.
Yeah, okay. So in who to save, I would say everybody should save. Okay, that's the short answer. And I would focus more on why save. So it's once you have a goal in mind about what are you saving for, I think it serves a couple of purposes. So first of all, you are having an objective that is not just vague. I'm saving. Saving for what? Saving how much? I think once you put that kind of context, it would make it hopefully more achievable and less stressful to have a structured program that you're going to save off. Now, about retirement and the different countries giving different benefits, and for them to be good, I think good is a relative statement. Because when someone is working and is used to a certain income level, especially looking at a culture that is very much consumer or consumption driven, which means that there is a certain standard of living, there is a certain expectation of how much money I have, how am I spending it, and then even if you have a generous package, which as I said, it's a relative term, once you are retired, but would that enable you live the same standard of living you used to before you retire? So because of that, and because of also when we look at how the pensions have been performing and what is the future outlook, what is happening globally, economically, I mean, nobody saw COVID coming in, nobody saw the government suddenly shifting a lot of their focus and budget on stimulus packages, which will definitely affect investment portfolios with the pensions as well. So when you think about all of these different aspects, and then one would wonder, am I doing enough? So if I'm depending only on what I expect to receive when I retire, and it's a generous package, and as I said, it's relative, then do I need to start to do something from now, bearing in mind that, yes, when I want to retire, I have a goal, and my goal is I want to maintain a certain standard of living. Especially, I would say something that many people don't really focus on is their health insurance for retirement. Because a lot of people work and they have health insurance from their employers, but once they retire, and that is really when they need the health insurance, did they kind of prepare themselves, whether it's through saving plans, through insurance policies, to be able to cover themselves if they need any kind of medical attention?
Excellent. Marwa, before I come to William and Fadhel, I want to come to you. I mean, do you have a view on who particularly should be saving? Is this we can talk about Bahrain, we can talk about the GCC, we can talk about the Middle East, we can talk about the world, but is there a particular angle that perhaps you and the boss take when you're focusing your outreach? Is it on older people, younger people, different income groups? How do you segment your messaging and why?
It's a very broad question, really, and the simple answer to that is everyone, really. So saving is applicable to every income group and every age group. But the main focus to many institutions, whether it's the market operators or the financial institutions or the investment banks, it's mainly the new millennials, because as you said, and as Dr. Yalma highlighted, in the next 40, 45 years, they will be at the retirement stage, and that's when they need their money and their savings and their investments to work for them. They have to make their assets work for them, invest in income producing assets to ensure that once they are at the retirement stage, their assets are producing that sufficient income to sustain them for a long period of time. And of course, as Zeeba highlighted, health insurance comes into play. It's a very important angle to highlight as well. But in terms of our operations as a market operator, our main focus in terms of financial literacy We have several programs that are targeted towards the younger audience, high school, university, and we also have public education programs that are available to the public on the basics of investing in the securities market. So we're targeting, so our messaging is customized based on the target age group that we're messaging to.
Do you segment by gender, by male and female? Do you have targeted programs perhaps at the more spendthrift males as rather than the wise females who look after the household budget?
No, we don't. We don't. Our messaging is segmented towards age groups, and we have financial literacy programs that are actually targeted towards the younger audience at the age of 9 and 10, educating them what is the stock market, how do you invest in the stock market, why do you need to invest in the stock market. We have, of course, simulation programs targeted towards high school and university students. They're much more advanced, and then we have to the public. So the messaging is different, but no, we don't segment based on gender.
No, actually, I mean, it's just I've made it a little bit of a joke, but in certain countries they do, and it's been extremely successful because the men. I know this is not a problem in Bahrain, but the men drink all the wages and the women save them. So, William, speaking of drinking wages, time to turn to the Englishman on the panel. Who needs to save? Is this just a general question for the MENA region, or is it something to do with the specific countries and economies there? Does it change by country? Does it change by sub-region? How would you look at the segmentation in this particular market?
Yeah, so I mean, it's a critical part of getting the right design for each country. So of course, in the region, but basically in any region, there's massive differences in wealth between countries, and there's massive differences between wealth within countries. And so if you're a kind of an informal worker working in a market with an irregular income in one of the countries in the region, your need and outlook is obviously extremely different to someone who's got a very well-paid job in the public sector with an extremely generous pension. So the who will vary quite a lot, and we kind of typically think you look at the country and what does the public sector pension side give, what does the private give or potentially give. Housing is critical, as people have mentioned already, and varies a lot between countries. Family is also still important, declining in most regions. But, the pension issue, the saving issue is so vast. If family is still worth 10% of my future saving or future consumption in retirement or the source of my accommodation, I would take 10% towards the solution very sort of willingly. And then, of course, insurance products and working. And, you look at all of those things, and then you look at the lower income, what's the lower income option? Often there's very little public. There's not well-developed private. So they're heavily dependent on the family. And that may be good, but as people know, some families are good and some families have problems. And so it's a very risky strategy to be heavily dependent on the family. Maybe they did okay on the housing, but unfortunately for many people who are in the poorer category, their solution then is working or being very poor. And you look at the effective age of retirement across countries, and the law may say 60. But you've got people working till 65, 70, 75. So Mexico, for example, has very high working at older ages because it's the only way you're going to have any income. So the solution or the package you need for those people is, of course, radically different from someone who had a nice formal sector job for 30 years and either there's a decent public social security system, plus they did a private, plus they had money for the housing, plus, maybe they're the head of the household and they're the ones who are kind of distributing the resources. So that segmentation is incredibly important. And I think also it's worth mentioning, it's good that you mentioned the gender side of it. So the OECD actually just published a really nice report on pensions and gender. And it's, again, depends on the country, but it's typically a massive issue. So even if in theory, someone has access to significant income. Maybe if it's a non-working spouse, often a woman, the household is rich. Again, there's massive differences in rates of divorce between countries and family breakdown and that kind of thing. So it will be more relevant to some countries than others. But in the UK, it was only recently that there would be any splitting of the pension on divorce. So maybe the wife helped the family raise the children, enabled a career of the husband had all of the formal pension rights. Then if there's a divorce, the wife has nothing. And so, again, it may not be relevant to some countries, but it will be relevant to other countries. Or what is, even if people stay together, pensions are basically a reflection of the labor market, and the labor market plus the policy environment. And so if you there's lots of very interesting data that there's no real gender difference in wages up until about 30 and in pensions often in a country. But as soon as someone takes time out of the labor market, that affects A, the number of years of savings, and then B, permanently the wages going forward. And then if pensions are based on wages, it has a permanent impact. And so looking at all of these things is very relevant. And I think the gender split is incredibly important. And then the age going forward. So let me end with the sort of final thing. So we've done quite a lot of work in Turkey that has a very generous public pension, social security pension. Less generous than it used to be, but you look at the numbers and it's always on the right of the charts in the OECD, over 100% replacement rate or close to it. And so why would anyone in Turkey save into an individual voluntary plan? Why did anyone join the auto-enrollment employer-based plans? And it's because a lot of young people say, okay, fantastic on paper. There's no way the country can afford to pay me that level of pension when I'm going to retire. So great for my parents' generation, but I need to have a different approach. So all of these, the income split, the gender split, and the age split are all fantastically important. And then finally, the labor market. Are you formal sector? Are you informal? And also recognizing people go from formal to informal to not working to having a business to back to formal to back to informal. So you've got to create systems which can deal with that diversity.
Thank you. It just shows how much there is to unpack. Well, we have a couple of questions, which I'm going to start by asking to Fadhel, because I think they're very relevant and they're really what we were going to come on to more or less anyway. We've got about 20 minutes left. So Fadhel, the anonymous attendee, I don't know whether it's one or two, but asks what products do the panelists think is ideal for household savings in the GCC? One of the challenges that we were going to go on to talk about is the absence of, well, is it the absence of appropriate products, and what from a banker's point of view do you think could be developed in the product space?
I think the answer to this is not straightforward, because one has to look at, there are the lifetime savings. So at an early stage, it's different from a late stage saving. But let's address the question directly. So when you choose some retirement schemes, for example, you would be offered, some aggressive, moderate, and then conservative options. The sort of aggressive options would be targeted for the young generation, where there is a higher allocation of stocks, lower allocation for fixed income products, i.e. bonds. At the mid stage, which is the moderate, tends to be a 50-50 split. And then at a later stage, when people are sort of well closer to their retirements, tend to be a little bit conservative in terms of their life, view of life. So they would shift more towards the bonds, less towards stocks. So it all depends on where you are in your in terms of age, what your preference is, but a mixture of stocks and bonds is a very easy way to approach it.
Mm-hmm.
Now, for most people, and this is the tricky part about saving, is that you really have to be committed. First of all, as Zeeba said, you have to have this financial literacy that you figure out what needs to be spent and what needs to be saved for the future and commit to that. Now, I think a very easy way is to just be part of a saving scheme that companies outside the Middle East are there are so many of these operators, programs that are available in Europe, US, and other developed countries, much less so in the Middle East, I would say. And if they are available, they tend to be sort of burdened with fees and expenses and so on. But I've taken a long time to answer a simple question. So I reiterate, it is where you are in terms of age-wise. Pick your sort of suitable portfolio of bonds and stocks. You can make it a little bit more complicated, but I would really vouch for simplicity and stick to these asset classes. Now, what is more important is that you need to diversify. So if all your sort of wealth is in these markets, then you really need to look at some other ways to diversify your risk. But I don't think most people are there. I think, as I said earlier, most of our wealth is focused and concentrated in real estate.
Yes, which, how should we say, has different values depending upon how you look at it. But do you feel as a banker that the savings products that are available in the GCC, or you can speak to Bahrain, do you think that they are innovative enough? Do you think they're appropriate enough? Do you as a banker see that there's an opportunity there to create products that may be more attractive to savers if they are good products and are appropriately marketed to the right demographics?
To be very frank with you, there aren't many available. And the ones that are available, as I said, tend to be exclusive. I've looked around, Googled saving schemes in Bahrain, and all I could find was just raffle deposits, as they're called. There are some schemes that are offered by some banks. These tend to be exclusive. They have a higher entry level. Again, fees and expenses are a very important element in this. So I think what needs to be done is a bit democratize the space, have the capital markets or operators. The banks come with simple to understand solutions, and they can't be made simpler than, say, a savings scheme made of equities and bonds. And then you can complicate it later on depending on the appetite of the client, but Bitcoin. You really can't make it simpler than that.
Lots of Bitcoin. It's a fantastic thing, rather.
Depending on how much money you have and how much money you want to risk.
Well, it depends on the time of day. You may have a lot of money in Bitcoin, then later on in the afternoon you'll have less. It's the way it goes. Marwa, speaking of proper financial instruments rather than Bitcoin, does the exchange, does an exchange like the Bourse have a role to play in innovating the right sort of products for people, savings products? I mean, is that something you should be doing, or do you think it should be the preserve of the banks and the non-bank financial institutions?
When it comes to securities products within Bahrain and within many of the GCC markets, there aren't any minimum restrictions. So as Fadhel highlighted, the entry costs are are not high, they're actually minimal. So anybody with anyone can open an account and start trading. There's no minimal investment required. However, what the question that has been posed in terms of products, I would see, or I would foresee that the financial institutions should be offering more retail-linked products that are easily accessible without any minimum investments to enable a higher entry level from retail clientele base rather than restricted to retail clients with a higher income level or minimal investment level. And I think that's the question being posed. And then the portfolio can be accustomed or according to the person's risk averse.
Zeeba, I'm going to come to you as we approach the sort of the final straight for our discussion. Do please talk to that about who has the responsibility to innovate. But there is another good question which I think I'd like all of you to answer. But I'll start with you, Zeeba, which is, who should be in charge of creating or nurturing financial culture and family savings? Essentially, who is responsible? Is it the individual, the family, the private sector, or is it policymakers? And if your answer is everybody, then what emphasis should they put? I mean, is it more of should government be putting in policy to require people, as William said, to do this? Or is it something that you feel may evolve organically?
Okay, so I want to refer to the saying that it takes a village to raise a person, right? So whenever you have saving, and I understand it's important to have a plan, to have a commitment, and to continue to be delivering this, but the reality is it's very challenging. And that's why we are having this webinar today, to address those challenges. So I think it starts from the family itself. And, as we grow up, obviously we are learning everything from our family. So what does money mean to us? Is it a necessity? Is it a luxury? Is it something we can spend easily? Is it something we should be careful about? All of these things that children grow up with, later on they apply in their lives. The way they see their family spending money is something that they learn. And that's why, and then they look at the wider community. So the wider community, everybody's spending. And that's why when I was talking earlier about making smart decisions when you are building your life, part of that is the tendency of some individuals to take up loans that they don't need, but it is basically to enjoy luxuries only because they see others are doing the same thing, so why don't I do it? So this goes all to kind of like a cultural, I would say, cognitive shift in how do you see money and the importance of spending? Why are you spending that money? What are you really trying to achieve? So as a responsibility, I think it's something that needs to be incorporated in the school curriculum, because that's the age that you see individuals are very impressionable. So you build them on you build that financial education on what is the importance of budgeting, of planning. And we also have this mental accounting, which is how do people classify what is important to spend, what is important to save, and how do they make their decisions? So they know that, oh no, I need to save money, but then why they don't do it if they know? So it goes down to that this needs to be instilled from the age, I would say, of school, and then continuously be updated for the different phases that an individual goes through.
God, there's so much there. Yeah, getting them young and that whole aspect of the culture is surprising. I'm sure surprisingly important. I know that my children always moan that I know they're not watching this, by the way, so I can be rude about them, but they didn't have enough to spend on ridiculous things that they didn't need. Well, now they have to pay gas bills, so they don't have any money. So there we are. William, I want to come to you on that, and also on a question of the there's another question about the role of banks and financial institutions from our anonymous attendee. I think there's more than one. Maybe there is. They're very shy, our attendees. which is, about fees and charges. Banks, non-bank financial, they exist to make money. I mean, this is what they do. They're providing a return for their shareholders. They're not utilities. Now, admittedly, some fees are somewhat excessive, but is this something that is the responsibility of the banks to come up with good products, or the governments to come up with, big sticks as well as some carrots? Who do we have to get to move to get this to happen?
Yeah. So I think, so as I said earlier, there's, you want to look at the country, and there's a public role, private pensions, housing, family, insurance. So there's no sort of one thing, but the only person or the only group who can make sure the overall framework is right is the government. And so the framework of legislation that creates the private pensions, the public pensions, short-term saving, medium-term savings, and also that enables massively excessive promotion of credit cards and debt. So you only have to sit down and watch any TV program, and you get probably like 100 times as many adverts on spending money, credit cards and debt as you do on saving money. And but that's a sort of another aspect, I think. And so one of the most critical roles then for the government is the design of the pension system, because pension systems are not they don't emerge spontaneously. And you go to a country, why is the pension system the way it is in Sweden? Is because it was designed that way, and in Malaysia or Australia or wherever. And one of the most critical things that the government can do is design a system which will be very efficient, which will enable the private sector to offer products, but in a way which protects the member from very high costs and fees. And so India does this in a nice way for their private pension system. Sweden does it. And the sort of core of it, if you like, is you can have massive innovation in terms of how to join a pension system or to make a contribution. All of the fintech stuff in payments contributions is amazing. Account administration is much more like a utility, because you want something which stays with you for your whole life. And too many countries, there's even a paper from the International Organization of Pension Supervisors on missing and lost assets. You have lots of different products with lots of different companies, you lose them, and effectively you lose 100% of your money because they can't find you and you can't find them. So think of account administration more like a utility. And then the provision of investment, fund management to those people can be done at scale. So not lots of individuals having lots of individual conversations with a fund manager, but you can have, here's my 1 million members or 100,000 people in this pension system. We want someone to deliver the default fund, have a competition among the fund managers. Who's going to do my fixed income? Who's going to do my global equity? Who's going to do my infrastructure? So you end up offering individual members very high quality investment, but they get the benefits of being like an institutional investor. You maximize the benefits of the expertise of the private sector. And that design aspect, which only the government can do, then enables people to get the best of the public and the private sector. And it will end up saving probably 200 basis points a year, 2 percentage points. And if you think we're going to live in a world where real returns maybe 3%, 4%, if only, if you have 3% real returns and your fees are 200 basis points, another way of saying that is 66% of the returns go to the costs or to the points. And it makes absolutely no sense. And people should not put their money in a pension system which takes 2/3 of their returns. They might as well put it in gold or in the local bank.
Bitcoin.
So or Bitcoin. So that's what I would say, that everyone has a role, but government has a unique role. And in particular, to make sure you design a system which can work for people and use scale for the benefit of the individual so that they don't have to have the expertise. Try and get a savings culture, but don't ever expect individuals to really understand it. Because most of my friends and family, well-educated people who can function at a high level in their area of expertise, find all of this pension and savings unbelievably boring. and or complicated, have no interest in it, and make very, very basic errors. It's not that they're not smart, it's that you're sort of affecting, if you think about it like a car, you're sort of expecting them to fix their own engine. Well, let's let people drive the car and let the car just be well designed so that it doesn't have to require a mechanics degree to kind of operate it.
Yeah, I mean, it's yeah, I mean, I work with a lot of my clients are fund managers, and I'm sometimes surprised about how they, certainly on the retail and on the savings sides, they can charge still so much for not very much, and it seems to be a one-way trade.
People just don't understand it. Even if you talk to someone about what are the fees, people will tell you, "Oh, we have no fees." You know, well, that's not true. Give me the things, and I'll read through it for my friends and family, if you like, as well as we write legislation for countries. You're like, "This is the fee," and they're like, and then they're outraged, and then they think all bankers are crooks. Well, it's like, no, it's a contract that you signed that had it clearly there, but there is a much better way of doing this, and let's hope we can get to that.
Great. Well, William, thank you. On that note, not all bankers are crooks. We have to end it, I'm afraid.
Oh, you've just gone muted.
Sorry,
I got shut. Have I said something incorrect? My host. I've been shut down. I've cancel culture. I've been cancelled. I've now completely forgotten what I was saying. I want to thank Marwa, William, Zeeba, Fadhel for their contributions. We covered most of what we wanted to talk about, but I know we've really just scratched the surface, and of course there are plenty more panels and interviews to come, including the one that I will do in about 90 minutes. Ibrahim, is that right? He's not there. Yeah, about 90 minutes, which is with Andrea Hassler from George Washington University in the United States. We're talking about financial literacy. But before then, thank you to our audience. Remember, this is recorded. If you want any nuggets, you can go online at Fintech Robos and find it. Thank you again to my panelists. Thank you to Ibrahim and his team. It's been an interesting hour. I look forward to seeing you all in about 90 minutes. Thank you very much.
Thanks very much.